Hello, I'm Joe Halwax, Wespath's Managing Director of Institutional Investment Services, alongside Chief Investment Officer Dave Zellner. We're here today for a special discussion about recent developments in the United States, its banking sector, and the impact it's having on the markets and the economy. So, Dave, let's start by looking at the origin of this latest crisis. As our viewers know, the United States and world economies experienced significant stress 3 years ago at the onset of the pandemic. Since then, we've seen an injection of economic stimulus, changes in consumer demand, Russia's invasion of Ukraine, issues in China and global supply chains, and other events that have all contributed to both high inflation and economic uncertainty. So just when we're starting to see improvement in the financial markets and inflation starting to come down, we've seen the second and third largest bank failures in US history in just over 1 week. So before we get to what this means for the markets and the economy going forward, Dave, can you help us explain just why these two banks failed?
Sure, Joe. So let me start with SVB, which stands for Silicon Valley Bank. As the name implies, the bank is located in the San Francisco Bay Area, and it primarily serviced entrepreneurial venture capital, technology, and health sciences companies located in the Silicon Valley. And as you know, innovative tech health science companies have been growing rapidly over the last few years and making a lot of money. And many of these companies held deposits with SVB. So at the beginning of March, rumors began circulating that SVB was in trouble and clients began withdrawing their money. Ultimately, this led to a run on the bank. Now, the second bank that failed was New York-based Signature Bank. At the opposite end of the country, they serviced a different clientele, primarily real estate and the legal profession. It also recently started servicing the rapidly expanding cryptocurrency industry. When rumors about SVB began circulating, clients at other banks also began withdrawing their money. And like SVB, Signature experienced massive withdrawals.
But so then Dave, was this similar to 2007 or 2008 where the banks were highly leveraged or making really bad loans?
No, Joe, this was simply a case of bad financial management. The banks actually invested their clients' deposits in super safe US government securities. The problem was that they bought the bonds when interest rates were low, and those bonds matured well into the future. And when interest rates rose, the bonds on their books lost value. Now, this would not have been a problem as long as the banks held the bonds until maturity. But they expected to hold the bonds until maturity. But when customers started making withdrawals, the banks were forced to sell, losing billions of dollars. And once word got out that they were in trouble, more customers started taking out money and the government was forced to take the bank over.
So do you think this is the end of the stress in banks, or are there more shoes to drop?
So the honest answer, Joe, is I don't know, and I don't think anyone really knows. On Wednesday of this week, we heard that a Swiss bank was in distress, which caused a lot of anxiety in the markets, and we saw the Dow Jones drop over 700 points at the opening of the market on that day. But the Swiss central bank stepped in to the rescue, which the markets viewed with relief. There are definitely rumors swirling about other banks, many of which have seen their stock prices drop like a rock. And if history rhymes, then I do think it is likely that we will see other banks under pressure.
So Dave, the Federal Deposit Insurance Corp, or FDIC, they took action over the weekend. Do you think that that action is going to be effective, and was it the right action?
Yeah, I guess I should first explain what the FDIC did. They took over the banks, wiped out the value of the company's stock, and kicked out company management. They said that they would honor the initial value of the bonds as collateral for any loan that the bank would need to fulfill deposits. In other words, the FDIC said all depositors would have access to all of their money. Now, it seems to me that the FDIC and the Fed regulators were stuck between a proverbial rock and a hard place. The biggest negative argument is moral hazard. And what I mean when I say moral hazard is that if those depositing funds with banks and the banks themselves know that the government will eventually bail them out if there's a problem, then they aren't incented to do thorough research and make prudent decisions. All depositors are insured up to $250,000 on any deposits with their bank. But in the case of SVB, only 11% of those deposits were insured. So in this case, it was pretty clear that failure to guarantee that other 89% of uninsured deposits would have caused massive disruption in the financial system. It would have particularly hurt small businesses and employees for a number of companies with deposits at the banks, and employees were at risk of not receiving their paychecks. While we've definitely seen market declines this week, it would have certainly been a lot worse had the FDIC not stepped in.
So I guess the natural question then is, what's next, and how do we think this current crisis will play out?
Again, Joe, I really don't know. While the circumstances are definitely different this time, it appears to rhyme with other crises. It's possible that other banks will fail, but we must remember we've been through these crises before. Our economy and financial system is resilient and will adapt. We may be in for some rough times ahead, but we continue to have an optimistic outlook.
So the final question, what impact has this had on Wespath's investments, and how have our managers responded?
Wespath is maintaining our long-term strategic focus. We had immaterial exposure to the affected banks nearly exclusively through our passive strategies. We've heard from our managers that they are taking advantage of pricing dislocations resulting from the crisis, as they typically do. We are maintaining our strategic allocations, giving our long-term optimism and the historical resiliency of our economy.
Great. Well, thank you for that update, Dave, and thank you to our participants and viewers. Certainly, if you have any other questions or topics you'd like us to cover, please let us know and contact your Wespath representative.